In 1978, things took a turn. Saudi Arabia's political situation stabilized, a new king took the throne, and two sheikhs came along. They're called sheikhdoms, right? Two sheikhs gave them money because the Saudis believed silver prices would rise, so they teamed up. So they founded a company in the British Virgin Islands called International Metals Investment Company. The Hunt brothers held half the shares, and the two Saudi sheikhs held the other half, making four shareholders. They accumulated a lot of physical silver. Can you imagine? It started again in 1978. Before 1975, it rose from $1.50 to $6, then dropped back to $3. In 1978, they brought in Saudi money. It was at $3, right? They pushed it all the way up to $16. If you don't believe me, you can look it up. It went from $3 or $4 to $16, a four-fold increase. But the hunts weren't done. It went up another 4 times. On the New York exchange, that's COMEX, they took delivery of 43 million ounces of silver. I told you before, they'd already bought 5,500 ounces, and then they bought another 44 million ounces. In just a few months, silver prices, just like today, suddenly surged past $16 an ounce. All the American financial groups went crazy and started buying too. They wanted it all, damn, just like now. They wanted to wipe out the East Coast COMEX shareholders and the old money groups. Deliver it, deliver it. They all followed suit. They were upgrading their wealth by monopolizing silver. Damn, COMEX was finished. As the market maker, COMEX had no silver to deliver. This situation happened again. By the end of 1979, between the two exchanges, there was one in Chicago and one in New York. Combined, they only had 12 million. Only 12 million ounces of silver bullion left. Just 12 million ounces. The Hunt brothers had contracts for an incredible 43 million ounces. And with so many others jumping on the bandwagon, how could they possibly deliver on such a huge commitment? And the Hunt brothers were very ruthless, those Hunt brothers. They only accepted bullion and refused to roll over. Rolling over gives the exchange a lifeline by delaying delivery. Like, it's okay if you don't have the goods as long as you accept my price. The shorts get liquidated, give me the money, and I'll let your exchange stay open. But if I demand delivery, you're dead because you'd have to declare bankruptcy since you don't have 43 million ounces. The Hunt said, I want delivery. Damn, they wanted delivery. They were going to start a Dallas exchange. So what happened at the end of 1979? It hasn't happened yet today, not today. COMEX and the Chicago Board of Trade changed the trading rules. No buying allowed, only selling. In today's silver market, COMEX is already acting like thugs by manipulating prices, but they haven't changed the rules yet. They did it before, though. At the end of 1979, they changed it to liquidation only selling, no buying. Starting today, all investors can no longer open positions to buy more than 3 million ounces of silver. For all silver futures contracts, whether long-term or short-term delivery, none can exceed 3 million ounces, not a single one. Buying is forbidden. And the margin requirements have increased significantly. It used to be around 10 or 15%, but now it's going up to 25%. Only selling is allowed. See, increasing the margin means taking your money. It's like the exchange is bleeding you dry. Because margin is real cash you have to deposit, or they'll liquidate your position. So, only selling is permitted. All contract holders with over 3 million ounces of each must, this was December 1979, must sell within 3 months, which means before February 1980. It's mandatory. Hunt immediately sued those bastards. He took them to court, saying these exchanges were acting as both the referee and the player. They must be my counterparties. They're shorting the market. They're shorting it. Today, COMEX is shorting. They've lost so much, they're desperate. Why? Let me tell you, the history I'm talking about is exactly what's happening today. Today, COMEX doesn't have enough physical silver to settle with the long positions. And behind COMEX today, there are major short sellers. Many United States banks have their money tied up in there if they don't crush the silver price. United States banks will go bankrupt. COMEX would go bankrupt too because they have no stock. History doesn't have a new script. It's just the same old story. Of course, later court investigations proved that the allegations by the Bunker brothers, Bunker Hunt and Herbert Hunt, were true. The shareholders behind the CBOT and COMEX were indeed holding short positions. They were massive short position holders They made a fortune because they crushed Hunt, but that's later. Hunt had already lost by then because United States courts are so slow. It took years. So what use was it when the truth came out years later? Hunt was already finished. So Hunt said directly in court that there simply wasn't that much silver in the market. Otherwise, these people wouldn't have been so shameless as to openly change the rules. The Hunt brothers didn't give up in December 1979. They continued to partner with the Arabs to buy, keep buying, and increase their positions. You want to raise the damn margin? Fine. We'll pay it in cash and keep opening positions. 3 million ounces limit? Okay. I'll do 2 million and find more people to do 2 million each. On the last day, December 31st, 1979, silver closed at $35.05. Crazy, right? It went up from $4, a tenfold increase, 10 times in just 2 years. Silver went up 10 times. Today's silver market isn't that crazy yet, so they don't need to change the rules yet. At this very moment, the Hunt brothers. Through this joint venture, the BY Company's silver open interest has reached 90 million ounces. And their personal physical silver holdings in Switzerland have reached over 40 million ounces on top of their previous 55 million ounces, 130 million ounces. Plus, they have a silver contract for 90 million ounces due for physical delivery next March, in March 1980. The whole world knew the Hunt brothers were set to win, because once March 1980 arrived, the United States, COMEX would have to refine and cast 90 million ounces of silver bars for me. Where the hell are you going to find that? There's only 12 million in total. So on January 17th, 1980, after the rule changes in December, they changed them again. They changed the rules again. The holding limit for each investor was set to 10 million ounces, so that 90 million ounces became void. You could only hold 10 million ounces. Any portion exceeding that 10 million ounces had to be forcibly liquidated by February 18th, which was just 1 month later. The result? It hit $50 an ounce. I just said it hit 35, then it hit 50. This time it's up 15, 20 times, almost 20 times. They kept buying. The two brothers had $3.5 billion in unrealized profits. That's $3.5 billion in 1979 dollars. It forced the New York COMEX on January 21st, 1980. Remember this number. On December 31st, 1980, the silver price was $35. December 31st, 1980, $35. And by January 21st, just 20 days later, it was $50. The New York COMEX announced it was stopping silver trading. They ceased operations. Holy shit, they quit. No more buying or selling. The silver price plummeted to $39, but it stayed high because by then, Bunker and Herbert had become enemies of the U.S. establishment. Why? Because they shook the dollar. On March 14th, President Reagan, his appointee, Fed Chairman Volcker, announced interest rate hikes to strengthen the dollar. Doesn't that look familiar? President Trump appointed a hawkish Fed chairman. On the day he took office, what happened to silver? What happened to gold? Because they shook the dollar. The dollar must be strong because if it weakens, America is finished. America is built on dollar hegemony. So Volcker announced a rate hike. Look at today. Look at whether there's a rate hike today. Look at whether there's a rate hike today. This is getting interesting. I'm telling you, in 1980, the Fed could raise rates. In 2025, 2026, the Fed raises rates. With the U.S. stock market so high, the Fed raises rates. Consequently, silver prices plummeted to $50, then $39, and snapped $21. Then after that, they significantly increased the contract margins, making it much more expensive to hold positions. Every single day, the Hunt brothers were required to provide a $100 million cash check to the exchange every day as margin. Even with Saudi Arabian oil being so incredibly valuable at the time, they simply could not withstand this kind of relentless financial play. So they traveled across Europe, rallying people to buy gold. But by March 25th, 2 months later, 60 days later, $6 billion in cash was exhausted. They couldn't hold on. On that day, March 25th, Bunker called Herbert and said just one short sentence. Let's give up. Let's give up. Then, rumors spread rapidly across the New York Stock Exchange that the Bunker brothers were bankrupt. They couldn't pay the $135 million due that day. By then, it had risen to $135 million daily. These two had held out for 2 months. Talk about being the richest. In March 1980, they couldn't pay the $135 million. The funds didn't arrive, so silver prices crashed. A few days later, the net assets in their futures accounts were down to only $90 million. At that time, the chairman of COMEX, Fed Chairman Volcker, and the U.S. Treasury Secretary, all three stayed awake 24 hours a day to ensure silver prices were driven down, preventing the Hunt brothers from getting financing and forcing them into bankruptcy. That's the power of the state. March 25th is known in the financial industry as Silver Thursday. March 27th, Silver Thursday. On March 25th, they couldn't pay the margin. Those three hadn't slept for 24 hours. On March 27th, at the opening, $15.8. At the close, $10.8, $10.8. The stock market plummeted along with it. The Fed raised rates, and the drop was almost the same as silver's. In those 2 days, the Hunt brothers not only lost their entire fortune, but also owed banks $1.5 billion. They declared bankruptcy. The war was over. After 48 hours, it ended. The Fed chairman personally announced a bankruptcy rescue plan for the Hunt brothers. What's a rescue plan? It's a slaughter plan. The East Coast old money banking groups, led by the Rockefeller family, providing $1.1 billion in cash to the Hunt brothers, but the requirement for this $1.1 billion cash was to collateralize all the Hunt family's prime assets in Texas, including the football team, including their real estate. The top real estate in Dallas all belonged to the Hunt brothers, including their ranches and dairy farms, all had to be mortgaged, $8 billion worth of collateral. The smoke cleared. Later, these American financial experts discovered that the cash poured in by the East Coast group was actually the same amount as the cash the Hunt brothers poured in, which was billions, $5 or $6 billion. The cash ratio was actually identical. That is, both sides in that Silver War of 1979 and 1980. Both sides used nearly $20 billion in cash to fight each other. In the end, of course, the longs failed and went bankrupt, while the shorts won. Then, after Bunker and Herbert's personal bankruptcy, the taxes they owed the IRS actually took 15 years to pay off, meaning it wasn't until 2003 that the old man finally cleared this debt. By 2003, we had all grown up, and the last of the smoke from this war finally dissipated. So this tells us a few stories, a few truths everyone should always remember. First, never trust the system of paper currency. Its credibility. Paper money can turn on you in an instant. It can act like a thug whenever it wants. Don't trust this piece of paper called the US dollar. It's not God, it's human. Real gold and silver are always the safe haven for wealth and the true investment targets. Both sides, for the sake of real gold and silver, you'll surely wonder if silver was rising so much, why were there shorts? And why were these traditional financial families, why were the old money families shorts? No kidding, because the stuff was in their hands. If you buy like that, aren't they naturally the shorts? Because you're buying things, who the hell is selling? Whoever has it sells it. So real gold and silver are always the safe haven for the world's truly wealthy families. It's all in their hands. If not, if we were wrong, why did Rockefeller, the Fed, and the COMEX exchange join forces to wipe out these Texas upstarts? Understand? That's the first point. Real gold and silver are always the targets people chase. Second, if your assets exceed $1 billion or $100 million, you should have at least 10%. In today's chaotic times and in the chaos before the 1980s, before 1979, at least 10% must be in real gold and silver, not margin futures. Not margin futures. Futures can have their rules changed on you at any time. That's not called real gold and silver. Third, never use leverage. The only way to beat these big sharks, the old money, is to pay in full and carry no debt. Because real gold and silver is a financial arena and gamble that even the world's top billionaires aren't sure of. Because if you don't use leverage, it becomes real gold and silver. But if you want to use leverage, take out loans or use margin. Whatever you want. I see people using 10 or 20 times leverage. Some use 50 times. Zhang Weixing used 50 times leverage before going bankrupt. I'm telling you, the big sharks will swallow you whole. That's just a foolish thing to do. Fourth, the world is diversified and full of multidimensional information. You never know which corner a shark or a challenger might be hiding in. Even Wall Street and the establishment's deep state don't know, so don't have such blind faith in them. Pick it, hold it, and stop looking. If it drops, let it. What do I care? Then it won't be able to drop any further. Every day it's like, oh, what's happening? Damn, should I sell? Did you use leverage? Did you buy it with a loan? Did you buy futures? Just stop playing. This is completely different from our philosophy. And playing like this just fuels the short seller's arrogance. All right.